All right, welcome back everyone to another YouTube video. I know it's been a while. I know it takes me some time to make these videos, but I'm trying to make the time and get you guys the information out here. So for today's topics, remember this is never financial advice. This is just what I'm doing, how I'm approaching the market. We're going to talk about earnings season. We're basically nearing the end of earnings season. There's going to be a couple here and there that are left behind, but we're basically done with all of earnings. We're going to talk about this massive market pullback that we just saw recently in the last 10 days or so. Very significant, very significant. I'm going to tell you some easy money stocks with insane growth opportunity within the next few years. So always keep that in mind. We're long-term investors. But when you see a big pullback like this, it is important to take advantage of the discounts. You know, if you like Lululemon, you see 50% off Lululemon, are you going to wait till it goes back up in price, or are you going to buy some Lululemon? You know what I mean? Let's talk about the government shutdown. So the longest government shutdown in history. We'll get into that and how that's a big cause of actually the pullback that we've seen in the stock market. Okay, so earnings season. For the most part now, we saw most of the earnings. One thing that I did want to point out to you guys is that companies performed pretty good. So far, here's like Meta's income statement, right? We saw a pretty large, 26% increase in revenue for Meta. Like, this is a massive company. It's a $1 trillion company. For them to be increasing 26% at this level, like, wow, Meta is insanely strong. There are some things that I wanted to go over for Meta. One, Zuck has been spending a lot of money on research and on developing the he's getting the AI integration. He's getting the base ready to go, because once we start seeing the AI revolution really start moving, I feel like we're still at the beginning, but once we start seeing it move, Meta wants to be at the top of that with Mark Zuckerberg, right? So he spent a whole lot of money on that, and the market did not like that. Wall Street did not like that, right? Other than that, there was also this massive one-time tax of like $19 billion because of Trump's big beautiful bill. But this is a one-time non-cash tax, right? So if we look at this, so it was a $16 billion one-time non-cash income tax charge. Right, 16 billion, which is, massive. But what does this mean? It means that they're going to expect a significant reduction in U.S. federal tax payments for the remainder of 2025 and future years. Basically, they put up a whole lot of money up front, and they're going to have to pay a whole lot less within the next upcoming quarters. So keep that in mind, right? Because their earnings this specific year or this specific quarter weren't great. But if you look at the revenue, 26% increase is amazing. Yeah, they had the one-off tax, and yeah, Mark Zuck is spending a whole lot of money on the infrastructure for the AI revolution. But I trust Meta, I trust Zuckerberg, and I think they're going to make us a whole lot of money next year. And if you look at the stock, come on now. Like, we went from 752 to 625 in 10 days. 10 days. Like, this stock is just waiting for a pullback. Like, it's giving all the fundamentals. Look at this. Let's look at the 3-month chart here. Like, it's right here at the bottom. All we have to do is just wait for it to go up in the Bollinger Band, right? And it's just, the thing about the stock is that, it's not really just Meta itself. It's more about the entire market, because the government is shut down now for a record number of days. And one of the guys in the Discord was talking about how 10 days for every week that the government is shut down, we're missing out on $10 billion of GDP. So, it's been a couple weeks now, so it's getting dangerous. But as you can see here, I already entered in one Meta Leap for next year. It's down about 25%, but to be honest, like, I just feel like it's going to go back up. Honestly, I'm thinking of averaging down. Today we saw Meta almost 6. It's crazy, because in my video, like, not even a month ago now, I was talking about getting Meta at $700. Look at it now, bros. It was getting $600. Meta. Like, this is just, it's free money. They're giving us free money. Obviously, we would want to see a resolution to the government shutdown. We want to make sure that the Republicans and the Democrats in Congress and in government, Congress, of course, they need to be able to figure something out, because, it's getting ridiculous at this point. But yeah, discounts everywhere, everywhere. The whole market was on discount today, right? So I mean, Meta at $600 at this stage in the game. I mean, if we look at like the projections that we have for Meta, the base case we see Meta roughly around 1,000. This is the base case next year. In the bull case, which is, I mean, they just give us 26% revenue growth. 26%. This is 20. So, I mean, and they're supposed to be getting less taxes for the whole of next year. So, as soon as they report Q1 earnings this year, Meta should skyrocket. We should see Meta move big and get a whole lot closer to these types of numbers. And that's like 50%. I mean, look at where we're at right now. 625 from 600. Are you kidding me? To 1,000? That's like a $4,000. Like, say you were talking about options. Like, this is a whole lot of money that is sitting there to be made. So, say you have like two of these, and this moves $400. You're making somewhere in the $30,000 to $40,000. Like yeah, easy money sometimes. But of course, we do have to see a resolution first. So, maybe not a bad idea to buy shares for now, just to make sure that you are involved, because this is a discount, this is a steal deal. But just be careful. Leaps at the end of the day should not be more than 10 to 20% of your entire account. For me, I like to go on the leaps because they've treated me really well, and I have high hopes, high expectations for these great companies in the next year. So I would say I'm a little bit more leveraged than I should be in leaps. But they're very powerful. It's a very powerful strategy, and I think they will end up in the green next year. Okay, what else do we want to talk about? Earnings season. Let's go ahead. I want to show you guys the fear and greed index, right? So we were, last time I recorded a video, we were in fear over here. Now we're in extreme fear. What does that mean, right? So as we go down all the way here, this is how much of our cash reserves we should have. So over here, it's at about 15%. Over here, it's getting to 10. The lower it goes, I really wouldn't get under 5% cash reserves, like ready to invest at least, just so you know that you are going to have cash in case anything happens, right? So never go down to zero, like in cash, ready to go. Always have about 5% of your account, right? So, I mean, here we're getting under 10%. So, and you see the market is really red. So what does that tell you? It's time to start buying stock. You should take advantage of the discounts. Another thing that I wanted to show you is that this is the longest government shutdown in history. The longest one in history. I mean, it's just crazy, man. I mean, the things that we see in our government nowadays, the corruption, everything that's going on, it's really unfortunate, but at the same time, this is news that we have to be aware of, especially as investors. You have to make sure that it's not just about the company and how they're doing. It's also about the world around it. Where is the company? Who is the customer? So these things matter, and we have to be aware of them, because if, say you didn't know that the government is about to be the longest in history, and you didn't even, you thought Meta was a great stock at $750, you're down pretty heavy right now. Like within 1 month, we saw a 12% cut of your entire cash out. But like 750 to 625 in 10 days, that's crazy. It's crazy. I'm going to show you guys some other stuff. So here we have so this is in my public Discord that I have available in the bio down below. If you guys want to join up, I just want a community of people who are similar mindset. And, we talk a lot in here. We have a whole lot of, we crack jokes, we got our guy DP in here. But it's a very cool community. And if you like options and if you are into the stock market, then make sure to go ahead and join. And, maybe we can chit chat some more. Anyway, so for some educational resources, I want to show you guys some of the projections that I got from Jeremy over at Financial Education. I really like his software, and I really like how he goes through and he just gives you the projections. Like, what a goat. But let's go ahead and start off with Celsius here. Celsius, I mean, everybody knows Celsius, the drinks company. I've talked to you guys about Celsius before. This is their earnings. They got about a B report. They also had some one-off type tax thing. For them, it was a distributor termination that kind of really messed up their earnings. But if you look at their revenue growth, tripled it almost from last year. Over here, they almost doubled it for the first 9 months of the year. Like this company is booming, and this is just the beginning because they haven't even hit the international market yet. So, I mean, if you look at the projections for Celsius, I mean, let's look at the stock now. You know, Celsius Holdings, CLH, baby. I mean, if you look at the stock now, we're looking at 42 bucks. You look at the last month, down 30% of its value. 30%. It just got cut. You have a 30% discount off on this stock. And if you look at the projections that we have, considering the revenue growth that they're doing, and this is a base case, right? We're looking at this, seeing this stock at a possible $69 to $80 just this year alone. That's already a double up, right? Because I mean, it's at 42 bucks. So minimum, like we're looking at like 50 bucks, or sorry, 50% return. And within the next few years, you could get almost 100% return if you're looking into 2027. And that's just saying that it gets 30% this year and then 15% this year, which in my opinion is very doable, right? Let's see what other good ones we have in here. Elf Cosmetics. Oh my goodness. I don't know if you guys were paying attention to the stock earlier this year, but as of this point, I just want to show you this chart because it is crazy. Elf got a whole bunch of hype earlier this year. During the April crash over here, went down all the way to 49 bucks, right? It climbed all the way back up to new highs over here. I don't know if these are new highs actually, but it climbed all the way to 146 from 49, so almost a 3x. And now all of the sudden, it took a complete dump, right? Elf for 2026. This is Elf, right? Elf in let's look at the base case here. In the base case for 2026, we're looking at it at about $100 or so. I mean, right now it's at about 70. It did have a pretty good hype cycle, but still, I mean, you can make some good money. And if you look at it over here, 140, it's already at 145 this year. And truly, I think long term, Elf is just like, it's going to be a monster of a stock. I think we're going to see a minimum at $200-$300. So another stock, this one would be a great time to sell options on right now. So if you look at the trade of, let's go back here. I think this is what I'm going to start doing. So I'll probably sell cash secured puts on Elf. I don't have enough to sell cash secured puts on Meta, or else I would to get the shares. But that's why I'm playing Leaps on Meta, which is 1 year plus call option into the future. I'll show you guys how those look. But for Elf, say you wanted to sell some puts right now. Let's go ahead and go about 34 days into the future. You know, this is pretty good returns on your money. Realistically, I mean, Elf right now is already down like 50% of its value. So it's probably, you're not going to get paid that great going all the way down. But say you wanted it almost $10 cheaper over here. Let's look at the Delta. Delta is about 0.37. It's a little bit more aggressive than the 0.3 that I generally recommend. But 385 divided by 71. I mean, let's look at this calculator. 385 divided by 7100. Nope, that's not what I wanted. Nope, clear out. 385 divided by. No, am I clicking the wrong one? No, 7100. Sorry, guys, I am spazzing a little. 5% in a month, 34 days. That's pretty good, considering that this is a company with easy money. Like this company is going to make a whole lot of money within the next few years, especially considering Trump has just made tariff deals with China. So he's making it a whole lot easier for you. $7,000 play. The worst thing that can happen here is it goes down to 67 bucks, and this is going to be your average price for that you're going to have to spend 100 share, or you're going to have to spend $6,675 on. But me personally, I'm taking that all day. I mean, Elf is a great stock. Another one, Celsius. I think because of the Celsius crash and how intense it was, it's probably a great time to sell some options on Celsius too. So looking to sell cash secured puts about a month into the future. Maybe that December 12th date. Maybe this one. What's this one? 0.48. I mean, honestly, not amazing for what it is. But I mean, like I said, the stock has already dropped so much in value. Like this one right here, obviously it's a little bit more aggressive. But 38, like buying this stock $3 cheaper after it's already down. Like if you look at this one, I mean, it's already down 50% of its value, right, within the last month. 30%, sorry. I mean, but still, you know, at this point, from going from 60 to 42 bucks, that's already a crazy steep fall. I would love to have Celsius right now at this price. Let's say I wanted to just earn a little bit of income, and if it, it's a way of protecting yourself. Say it went down a little bit more, then you would have it at 38.86. Otherwise, you get paid this 242 bucks on 4,200. That's I'm pretty sure that's pretty good. So 242 bucks divided by 4,200, another almost 6% return in 1 month. Like, guys, these are great returns on great companies. And the worst thing that can happen is you have to buy 100 shares. But these companies are just so great, like you can hold these forever and they will make you a whole bunch of money. Cheesecake Factory, another stock that's also down right now, which I also was considering selling some options on. You look at it, wow, man, the market has just been brutalized this past month, really, just this past like little bit. I mean, we went over here from 56 bucks to 47. I mean, that's not even that bad, but if you look at like overall where it got to 65 bucks over here in August, and now it's all the way back to 47. I mean, it's a decent bit. Let's see if we could sell some puts on here. Looks like this one might not be as popular, but something similar, something over here. It's about a 0.46. You're getting 200 bucks on 5,047.50. What is that? Let's check it out here for you guys. 200 divided by 47.50. 4.2% on another great company. Amazon. Okay, so we're gonna get into leaps now because these companies for me are a little bit too expensive. Amazon is doing really well, but if you look at the last thing is, I mean, it got up all the way to 256. Now it's back at 245. I think a long term, like if we're looking at you could just go so far back. Like, you could just buy Amazon stock is what I'm doing. Because I have two accounts, guys. I have one where I trade options and I have another one where I'm purely just buying stock. That's what I would recommend everyone have. That way, at the very worst, your other account will bounce back. Your options might get hurt a lot. Your account could get cut in half. Say the market goes red. Say the government doesn't open up anytime soon. Like, it could be really bad for this options account. Obviously, I'm hopeful, and I think that we will end up figuring it out because Trump is a billionaire himself, and all of his friends are billionaires. So they're gonna, if the market goes down, they're gonna lose money. They're all gonna lose money. That's everybody loves the stock market when you're really rich, right? So I doubt that the government is gonna stay shut down for too long. But anyway, leaps options on Amazon. One, you could buy stock. Two, you could go out somewhere in 2026 and see if you can get a little discount on everything. Right now, 3,900 bucks for Amazon to 288. Obviously, these are new highs, but for a $250 call, like think about it, you'd be spending $25,000 for 100 shares. But for this one, you're getting a zero point 0.6 delta and you're spending 4 grand for over a year, like a year and a month. You're spending 4 grand instead of 25,000. You get to control them with a 0.6. That means instead of getting $1 or $100 for having 100 shares every time this moves up, you'd be getting $60. This is a snag. I honestly I want this one right now. This is crazy because honestly, like Amazon is I'll have the projections in here for you guys for Amazon. Look at this company. Like if they just perform how they normally should, 14%. Like these are pretty good for Amazon. These are decent returns for Amazon. But Amazon is going to show up. They're going to show up. AWS is growing. They showed up this quarterly report. So I think they're going to keep showing up, right? And if we can see Amazon at 285, 326, anywhere in between that, then this contract is already in the profit. We're going to make a whole lot of money. You know what I mean? And even on the way up, like I'm sure we'll see it go up before that. Meta. This is the one that I've been loading up on. I think I'm just going to keep adding because Meta is one of the best companies on the stock market. And for them to be doing 26% increase in revenue in 1 quarter at the place where they are at, I mean, this is a $1 trillion company. If you look at this is a $1.6 trillion market cap company. For them to be growing 26% revenue every quarter, great, insane, like actually insane. Anyway, so I have this one on it. I think I might just do the same one, if not. But yeah, I'm already down, so I kind of want to average down on this one. But what I would do here is go on Meta, trade Meta options, buy call. You want to go as far out as possible because Meta is easy money. Let's go January of 2027, right? And they're not going to be cheap. I'm going to tell you that right now. So for the 600s, ideally I want something in like this. Like the 700, I feel like is easy money. It's pretty expensive though, 9,000. Ideally like maybe something around 8,000, 720. This is probably the one that I would go for, $8,000. I mean, to own 100 shares of Meta, it's going to be cost you about 63 grand. So to have ownership of 100 shares for $8,000, I mean, that's a snag, you know. And if you look at how the contracts move here, let me show you this. This is what I feel like people need to understand a little bit. Damn, I have a lot of these on here. Which one was it? The 720? Yep. Let me show you guys how these contracts move. Look at this. This was at Meta at 750. It's at $15,000. Now it's at almost $8,000. So that's almost 100%. Like if you think about it now, say the contract went from $8,000 now to, and it just got back up to 750. The price of Meta got back up to 750. Imagine if Meta goes to like $1,000. Like you will triple your money with this contract, and that's what I did on the AMD contracts, right? Um, AMD is another great one to do right now. I know it pulled back a little bit, but this is what I mean. Like the power of leaps are really good, especially because you have so much time, and the stock could move up so much to a point where, like this delta that you see over here, instead of having 49 cents to the dollar, it will go up as you get closer to the strike, right? So this doesn't it's not a fixed number. So at some point, say you're really in the money, like every dollar it moves, you're going to be making $100 or $99.99, not $50, not 49, 100. You know, so at that point, you've basically bought 100 shares of this company. Instead of for 63 grand, though, you bought it for 8,000. So I'm just saying, if it works out your way, if you have done your research properly, you can make a bunch of money with this type of trading, right? So we went through Meta, Amazon, AMD, Google. I like Google, but I would do either Meta or Google. I don't know if I want to do both. Amazon, AMD, Meta, easy money. Cheesecake Factory, Cake Stock, Celsius, um, Elf on a Shelf. All really good ones. PayPal, another good one. I posted the PayPal projections in here. Shout out Jeremy from Financial Education because I get all of these from him. He's amazing, really amazing. But PayPal stock has been hit hard. Another look just to show you over here over the past month, over the past week, maybe. Yeah, this is what I'm looking at. Yeah, it's down 2.2%. S&P is still strong though, guys. Like we haven't seen nothing yet. Let's look at PayPal over here. Another stock that's been beaten down bad, which is what we love to see. 11% this past month over the last 3 months. You know, so. I mean, on the year to date, it's down 22%. So yeah, you could say it's been beaten down pretty good. But if we look at the PayPal projections, let's look at the base case for guys. So for the end of 2026, we should be seeing PayPal at around 100 to 130, call it 115 bucks. It's almost a 100% increase on your money from right here. And let's see if they have any juicy options, right? Because PayPal could be a good company. I don't know about you guys, but I have PayPal. I use it fairly often. Looks like you're getting about a 5%, something a little bit less than 5%. So yeah, so you could sell cash secured puts here. You could buy the shares, sell covered calls, or you could buy leaps. I mean, I personally like to do leaps. I think they're great. And another company where the projections are posted in here, and they should make a whole lot of money. And according to their numbers, according to the numbers plugged into this software, this is where their price should be at the end of last year, at the end of the next year, sorry. So yeah, I mean, we'll see. We still got a whole lot to go. All right, guys, if you've enjoyed the video, I know it was a long one today, a lot to go through. If you enjoyed the video, make sure to like and subscribe, and leave a comment down below if you want me to talk about anything else. All right, I'll see you in the next one.